So what could this month of August have in store for the markets? Let's get straight to the floor show. Joining me now live is Nomura Chief Economist David Seif on set with me, and Mainstay Capital Management founder, CEO, and Chief Investment Strategist David Kudla. It's the Davids, so I will use your last names, and I will start with you, David Kudla. Good to see you. Thanks for coming in on a Friday in August, right? Summer Fridays. What is the real state of the United States economy?
Good afternoon, Lauren and David. I think the real state of the U.S. economy is this. You know, we've talked about this on the show about a stagflationary light economy. What do we mean by that? We've got 3% GDP growth in the second quarter. GDP now is around 2.1% on the latest read for the third quarter. We just got a jobs number that was very disappointing. The revisions are disappointing. So we have an economy that's okay, some concern about the labor market, and inflation, our inflation read was a little hotter than expected. So we're calling this stagflation light. That's really where we think we are on the economy. Does it concern us a lot right now? No, it doesn't. And we think that with the prospect of the stimulus coming from OBBBA and the potential for rate hikes later, or rate cuts later this year, we've got some stimulus that'll be coming in. And earnings too. You know, earnings on June 30th were estimated at 4.9% for the last quarter. As of today, we're up to 10.3%, more than a doubling, double-digit earnings growth, which, you know, stocks trade on a lot of things over the short term, but it's all about earnings over the long term. So we think the economy is resilient, and we're still constructive on stocks in the second half of the year.
I'll put you down as optimistic. David Seif, if you were Jay Powell right now and you're looking at this report, what are you more concerned about? Are you more concerned about inflation, or are you more concerned about a softening job market?
I think Jay Powell has been pretty clear that he is still more concerned about inflation than the job market. Certainly this raises the amount that he's concerned about the job market. Mm-hmm. You can't look at this report and say otherwise. But that was a pretty hawkish press conference he gave just 2 days ago.
But he mentioned 6 times in that press conference downside risks to the job market.
Yep, and we're starting to see some of those here, but we still only saw the unemployment rate tick up to 4.2%, a high 4.2% to be sure. But you know, we're having a lot of, shall we say, weird seasonality that's going on with some of this data. And this is the 3rd straight year that over the summer, the 3-month average of private jobs outside of healthcare and education has turned negative right in the middle of the summer. And so the 3rd straight year, people are freaking out about it. Now, can't necessarily say the same thing will happen as what happened in the last 2 years, but we saw a big recovery as we got into the fall and into the winter in that same measure, and any recession fears were cast aside at that point. So we want to sort of, you know, really focus in on how much of these non-farm payrolls numbers are actually telling us what's going on versus how much of this may be seasonality issues or other data issues.
Right. So you don't seem that concerned either. David Kudla, back to you. With declines like this in the stock market today and jobs numbers like the ones we just got plus the revisions, I mean, what are the chances of an emergency rate cut? Would that make you more nervous? And then also, what are the chances of a September rate cut by the Fed? Futures pricing in an 83% chance of that happening now.
Yeah, so if you remember this time last year, we were in a similar position, maybe for different reasons, but there were people calling for a 50 basis point emergency rate cut, another 50 basis point cut at the next FOMC meeting. And it was a bit of a false alarm, maybe a big false alarm. Mm-hmm. So, you know, I'm with David here on, we know that the Fed, or with Jay Powell there, is going to lean more hawkish. He's going to be more concerned about inflation than maybe the economy right now, and we do have those seasonality factors. So I think for September, you know, we were at 60% chance of a rate cut in September when when PCE came out, the preferred inflation indicator for the Fed. We dropped to 40. Then non-farm payrolls back up to 80% chance. We're going to see that be very volatile with every data point. But I think by the time we get there, it's more likely than not that Jay Powell will still be holding on interest rate, on Fed funds rate And don't be surprised.
So September is not
don't
a slam dunk out of all of this, and I think the two of you agree with that. Last question to you, David Seif. You know, we had all this soft data that was coming in. Consumers were a little less confident. They said they were worried about this, and there's 100 reasons why that could happen. But do you think that those fears are now validated by the hard data that we've gotten?
I think a lot of those fears were mostly on the idea that the tariffs were going to completely tank the economy. That clearly has not happened. Maybe there's a little bit of a hit, maybe there's some growing pains, but the idea that we're going into some deep recession, that's completely off the table. And I think the recovery in confidence has mostly come from the fact that we've gotten through what appears to be the worst fears from the tariffs. There's also some really good data out there, right? People are not really losing their jobs. So job creation has fallen, but job losses have really not fallen. So if you still have a job right now, which most people, of course, do with a 4.2% unemployment rate, your odds of losing that job are about as low as they have ever been.
Yeah. And you can still spend money.
You can still spend money.
Average earnings 3.9%, well above the rate of inflation. And oh, wow, economic growth at 3%, above that, too. So I guess we do have good news as we have this sea of red. David Seif, thank you. David Kudla, thank you.
My
Enjoy
pleasure.
the weekend. We have the Dow down